Welcome to our 2021 webinar series. LLIS believes that in 2021, knowledge is key. Each month, you'll learn key insurance solutions to better your insurance knowledge. Our insurance specialists keep up with the constant changes in the insurance industry, especially during a pandemic. Our specialists will review some basics, use case studies to show how LLIS crafted risk management strategies, and answer your insurance related questions. Each webinar will last about 50 minutes, and you must be logged on for a full 50 minutes to receive CFP credit. Please be sure to ask questions as you have them by typing them into the questions box. We'll answer all questions at the end of the presentation. Today's webinar is being recorded and will be posted on our website within a week in case you missed it. Today's presenter joined LLIS in 2005 and has paved her way to covering various types of disability and critical illness insurance. She brings you and your clients the most up-to-date solutions in disability. Here to present on understanding specialty-specific disability coverage is Kathy Bilodeau. I believe we have some technical issues, so just give us a second and we'll get Kathy on board.
Hello?
I hear you, Kathy.
Okay. Sorry about that. A little technical
No worries.
difficulty. Okay.
Just make sure you're on slideshow mode so we can see the
Right. Doing
presentation.
that right now. Okay.
Go to the top left to display settings
And swap it out.
and swap it out.
Okay.
Good to go.
All right. Very good. Sorry about that, everyone. Thank you, Claudia, and good afternoon, everyone, and thank you for tuning in today. As Claudia mentioned, our theme this year for our webinars is Knowledge is Key. So you will be seeing various graphics relating to both knowledge and keys throughout my presentation today. I also will be imparting knowledge to you today, not on the traditional disability coverage and not on the traditional business disability coverage that you're accustomed to hearing from me, but rather on, we're going to talk about group insurance. So, with group insurance, we're going to talk about life, short term and long term disability, and also dental and vision. In addition to that, we're going to be talking about our Lloyd's of London specialty plans. These are plans that we use for individuals who have unusual occupations or they're hard to insure simply because of the amount of money that they're earning. People such as lawyers, fund managers, physicians, lawyer and attorney is the same thing. Sorry about that. Um, and then also, we're going to talk about individual short term disability. This is coverage for people who may not have access to short term disability through their employer, or individuals who might have it but still can't seem to keep 90 days of emergency cash available to them. And so this would be an additional protection for them. And then last but not least, we're going to talk about individual critical illness. And this is a solution that I think is going to be extremely beneficial and has been expanded to make it even more enticing because of all the various situations you can use it. So we're first going to talk about group. Now with group insurance, we're going to cover life, short-term disability, long-term disability, dental, and vision. Now, here's some of the basics for our group products. And I just want you to know that with all of these, we have incredible news to share with you that the minimum lives used to be two, and they've now scaled it back, or excuse me, used to be three, and they've now scaled it back to two. So that means it opens up a lot more opportunities for us to provide coverage for your employer groups. So with the group insurance, the first one we're going to talk about is life. And so with life insurance, the minimum amount is $10,000, but we can go above that if we want to do one-time salary, if you want to do a $50,000 amount, we can certainly do that. Now keep in mind, the lower the number of employees, the more underwriting there's going to be, because obviously we don't have a lot of premium coming in to cover that risk. So the more lives we have, the less underwriting. And I'm going to go into greater detail in just a minute with that. So the next thing we're going to talk about is group short-term disability. And with short-term disability, what the benefit amount is weekly. And that just means that we could give them anywhere between 40% to 66 and two-thirds% of a weekly income of either $250 all the way up to $2,500 a week. So we can customize it as to what makes sense for that particular group. And the benefit period is anywhere between 13 or 26 weeks. And the elimination period could be 8, 15, or 30 days. Now, with the group LTD, the benefit amount is a monthly benefit. And here again, we can go from 40 to 66 and two-thirds, and anywhere from $2,000 to $10,000 a month. And it's usually an equal increment. So, $2,000, $4,000, $6,000, $10,000 a month. It's not like, okay, $2,250. It has to be an even number that they are providing. The benefit period can be as little as 2 years, 5 years, or to age 65. And you have a choice of an elimination period of 90 or 180 days. And for those of you who don't know what an elimination period is, that's the period of time where there is no benefit being paid. You're waiting to be eligible. So keep in mind that when we offer group insurance to an employer, it not only is it making that employer, the boss, the owner of the company, look great because he's providing benefits, but it also can help in situations where maybe we've got a medical condition that we're trying to cover either on the owner or the employee, such as Crohn's. So if you have someone that has Crohn's and they're trying to get individual disability, it might be a problem in that one, they could be uninsurable, or two, they might have to pay a rating. They might have a reduced benefit period. They may not be eligible for all the riders. So it would just be kind of like a whitewash disability plan if they're able to get anything at all. Where with the group insurance, we might be able to fold that person right into the group and we don't have to worry about that medical condition at all. So that's something to keep in mind as well. Now, with group insurance, the things that I need to know about are what's the name of the company, what's the industry, where are they located? So, in other words, is there a headquarters and everybody works out of the headquarters, or are people working remotely around the country? I would need to know those locations for the quote. I also need an Excel spreadsheet, which is our census, and that would contain the employee's name, their date of birth, what occupation they have within the organization, their annual earned income, how many hours do they work, etc. I need to know if the coverage is going to be paid by the employer or if it's going to be paid by the employee or a combination of both. And then lastly, what's the effective date that we're shooting for? So like right now, I'm working on a group and we're shooting for a 7/1 effective date. So we really need at least, 4 to 6 weeks in advance of that effective date to get that group installed. Okay? And everything with regard to group insurance is done electronically. So we don't have to worry about, paper apps going out or anything like that. So these are some optional riders I wanted to share with you that we can piggyback onto the disability plan. So one of them is to have a return to work child care rider, which would provide anywhere from $100 to $800 a month for a partially disabled employee who's still working to help offset that cost for child care. We can add a medical premium supplement. So, independent of the regular benefit, there'd be a separate benefit to help pay their COBRA premiums because obviously, if someone's disabled and they're not working, they may not be getting their COBRA premiums paid or their health insurance, excuse me, and they're on COBRA. We can put a COLA rider on there, which someone who's going to be out long term on a disability plan, that would increase that monthly benefit that they would be getting. And then the ADL, that stands for Activities of Daily Living. So if you lose two or more of those, there'd be an additional benefit paid on top of the regular monthly benefit. And then this one is called Dependent Education Benefit. It just helps a disabled employee help pay for their eligible dependents' college tuition. And then conversion privilege, this one just means that if you're a working employee and you decide to leave the firm, you can ask that the policy be converted from a group plan into an individual plan so that you can take some sort of disability plan with you. Now, with the dental and vision, as you all know, we do work across the country, so we're able to install groups in most states. And the dental vision works the same way. We can go down as little as 2 lives. The nationwide PPO network is for across the country for both the dental and the vision. And obviously, we can include coverage for dependents just like we do for the life insurance. It does have a 1 year rate guarantee, and we can have it be employer paid or we can have it be employee paid. So let's talk about what the underwriting is like for group. So when we have a small group, which is our 2 to 4 lives, what's required there is full underwriting. So in other words, the employee has to fill out an employee statement of health. They're going to be asked several medical questions. They're going to have to provide physician information because the premium is not that great. And God forbid, if something happens to one of them, they need to obviously reduce the risk as much as possible. So it might be someone that's not going to get covered. In our 5 to 9 lives category, there is no employee statement of health. Rather, it's an employer statement of health. And on this questionnaire, it asks if the employer, the owner of the firm, asks, is asked if any employees are not actively at work right now due to an illness or an injury, or have been out for 5 consecutive days in the last year. And they need to answer whether they know of any employee or dependent, if we're covering dependents, has been diagnosed as having a back condition, cancer, heart disease, kidney disorder, a liver disorder, stroke, or any other serious debilitating illness. And then lastly, with our 10 lives, that's a guaranteed issue situation, so we don't have to worry about any type of health issues. Now, in addition to having that group life coverage, the life insurance benefit, we also have a free service that's available, and it's called AXA Travel Assistance. And what this does is it provides to the employees and to the employer, if they're traveling, help with any lost or stolen items, any medical or dental assistance, or emergency medical transportation. It helps when you're in a foreign country to get messages delivered, overcome language barriers, if there's any kind of legal thing going on that you need assistance with while you're in a foreign country. And then lastly, it does what we call pre-trip research. So it helps with explaining some of the cultural differences and things that you need to know when you're traveling to a foreign country. Things to know maybe regarding the language, hand gestures, how to dress, all those types of things. In addition to the travel assistance, they have some legal assistance as well. And with the Will and Legal Document Center, obviously it's going to provide assistance with wills, but also with power of attorneys, estate planning tools, medical treatment authorization for minors, and then your identity theft kits. And because we have that with the life, well, we have to do the same thing with the disability. What's disability going to give us? Well, as most of you, if you've ever worked for a corporation, you might be familiar with something called the Employee Assistance Program. And what the Employee Assistance Program does is it provides services if someone's suffering from anxiety or depression, substance abuse, regardless of the reasons why, they're there to assist. They also have some health and wellness articles that might be helpful. They have online assistance with elder care, child care, and other family life resources, in addition to helping out with teen and adolescent issues and parenting, regardless of the age of the child. And then they also have 24/7 phone consultation with a licensed medical professional, and they also provide ongoing personal coaching sessions via the telephone. And then lastly, what they have is what we call discounts or services on these particular programs. So if you're considering laser vision, laser correction, they have something that would help in that area. If you need hearing aids, vision care, if you need to get your eyes examined, some glasses, same with dental health. You need to get your teeth examined. And then beneficiary support. If a loved one has died, they help not only with the emotional aspect of it, but with the financial aspect of losing a loved one. So I put together some group cases for you to kind of illustrate where these come into play. So the first one I have, it's an automobile dealership. And when this group came to me, they actually had life insurance already. Unfortunately, they weren't real happy with the company they were with. And the reason for that is because they'd been with them for a while, so the plan was installed, and now they wanted to make some changes to it. And the insurance company was kind of giving them a hard time about it. The changes that they wanted to make were simply that they wanted certain people to have a certain amount of life insurance, and they also wanted certain people to have to wait longer in order to be able to be eligible for that life insurance. So in this case, they wanted the salespeople and the owners to have like a 90-day elimination period or a 90-day probationary period. But the people that were like their detailers and some of their auto technicians, they wanted them to wait a little bit longer because I guess the turnover might be a little higher in that area. So they wanted to make sure that that employee was going to stick with them before they provided that benefit to them. So with this particular case, we were able to get 75,000, which is what they wanted, to the owners, and then $30,000 of life insurance for everyone else. And we also picked up $20,000 of voluntary insurance, which means that if any of the employees wanted to purchase more life insurance, they could purchase up to another $20,000 and pay for it themselves. And the annual premium on this, a whopping $139. So here again, this was a great opportunity for them to provide a benefit at pennies on the dollar. So my next case, financial planning firm, not unlike yourselves out there. They had 5 employees and they needed long-term disability and they also needed short-term disability. So I'm going to show you what we did for the long-term disability first. So they chose a monthly benefit of 60% to 6,000, a benefit period going to age 65, a 90-day elimination period, and a 2-year OWN-OCC. And the OWN-OCC simply means that the employee is protected for at least 2 years, the first 2 years that they're disabled, where they don't have to worry about being forced to go and do another job simply because they can't do the substantial and material duties of their job. And the annual premium on this was approximately $22.69. Now we take another company. This is a law firm, and they have 5 employees as well. They took the exact same plan, but their premium is a little bit more expensive. So we went from 2269 to 2400. So keep in mind that deviation group insurance is based upon the age group of the individuals. So when you have some older individuals in that census, that's going to account for the premium being a little bit higher because it is age banded. And our same financial planning firm that we did the long term disability on, they also asked if we could do some short term disability. So, again, short term disability is a weekly benefit. So they chose 60% to 1500 and a benefit period of 3 months because their elimination period on that long term disability was 90 days. So this will segue right into their long term disability. And it's a 14-day elimination period. So 2 weeks, we'll know if something's very serious, if that illness is turned into, maybe pneumonia, um, and or obviously with an injury, how serious that injury is. If it's something that's going to keep them out beyond 14 days, then obviously they're going to be entitled to the benefit. And the annual premium on this was $1,242. So we've talked all about group insurance right now, and now we're going to segue into our Lloyd's of London. And Lloyd's of London, I'm not sure if you're aware of this, but we kind of call that, I call it Lloyd's, but it's specialty insurance in that um, it comes from different sources depending upon what the situation is. And I call it hard to insure through traditional carriers is where we would mostly use Lloyd's of London. Um, our traditional carriers will only offer $20,000 to $30,000 of disability a month. Lloyd's of London doesn't have those types of limitations. And we normally will use them in situations where if it's a high wage earner and they're making in excess of a $500,000, or they've got an unusual occupation. So your professional athletes. We had a jazz musician that was a Grammy winner. So a patent attorney who was selling his business and he needed the insurance for a couple of years so that that sale would go through. So it just depends upon what the circumstances are. So if you're not sure, give me a shout out, run it up the flagpole with me, and let's see if we can't take care of it. But for right now, let's just go through what the way we get a Lloyd's quote and how it gets activated, and then I'll get into the weeds of what it covers. So the process is a little different in that if you reach out to me and you say, "Hey, Kathy, I got this guy. He does this and he makes this, and we're wondering if we could get a Lloyd's of London quote." And I'll say, "Okay, great. This is what the process is. We get the quote. If the client decides they want to move forward, we take an application, and it's a paper app. We're very old fashioned, just how Lloyd's of London is. And it's a paper app. They have to submit their financials. Once the underwriter reviews that, they'll make the determination if they want to go forward. And if they say go forward, that means that we can go ahead and get that person medically examined. Once they get the medical exam, that will be the determining factor, obviously, because they've already reviewed the application and they've already reviewed the financials as to whether they're going to make an offer. If they decide to make an offer, then an invoice is sent as to how much the premium is going to be for the offer that they have accepted. And then once the premium is paid, and it's got taxes on it because this is a different kind of plan, but once the premium is paid, then and only then does the insurance company release the policy. So it's a little different than your traditional disability, but don't worry, I've got it down to a science and I'll walk you through it. So let's talk about the little nuances of Lloyd's of London insurance. So we already talked about the fact that it does cover atypical occupations or incomes, but it also does something for older individuals who need disability insurance. So it can go beyond the traditional disability age of 60, 64, whatever the case may be with certain carriers. So that doesn't present a problem when we're going with a specialty insurance like Lloyd's. And again, the monthly benefits can exceed that traditional 20 to 30,000 that individual disability can offer. And here's the great thing. So it does have what we call specialty occupation language. And this is really important when we have physicians that are surgeons and the vast majority of income is being generated from performing surgery. And what this language does is it protects them from being put in a situation where they can't perform surgery, but they can still see patients. This allows them to not have to worry about going in and working at all. They could still collect their entire disability benefit because they can't perform surgery or whatever the substantial material duties are of their particular occupation. It does have a limited benefit period, so it doesn't go to age 65 like traditional disability. We usually have a 3 or 5 year benefit period on it, and then it's also renewable. And what that means is you get to deal with me every 3 to 5 years because we have to renew it. It doesn't automatically renew. So we have to go through the underwriting process again. And most of the time, if you're 50 or under, you're going to get a 5 year. But if you're over 50, it's usually going to be a 3 year renewal. So let's look at some case studies. This one is a soccer player. Franco's 25, and he hasn't hit it big just yet. He's making about $400,000 a year. And with this, it's a little different than regular disability in that there's only two things to it. We have the benefit amount of $1 million, and the elimination period is 12 months. So if he's continuously disabled for 12 months, he's not able to play soccer, then he'd be eligible to get $1 million payment from the insurance company. And his renews every 3 years, and that's pretty traditional with a professional athlete. But we can lock in the premium. So we sold this policy this year, and his premium 7,000. When I reach out to him next year with the invoice, the premium is going to be 7,500, and then in 2023, it's going to be $8,000. Now, here's one that might be a little bit more common for you. This is Howard. He's 53 and he's a maternal and fetal medicine specialist. And he has an annual income of 1.5 million. And he had 60% to $10,000 of group disability. And he also had $16,000 of individual insurance with Peterson. And he wanted to replace that. So what we were able to get him was $25,000 of monthly benefit. He wanted a 90-day elimination period and a 5-year benefit period, but it has to renew every 3 years. And again, most of the time when we're seeing individuals in their 50s, it's going to renew every 3 years. So his annual premium was approximately $8,157. Here's another individual. This is Patrick. He's age 51, so he's a couple years younger, and he's a CEO of a health system, and he's making 1.3 million, so not quite as much, but he wanted another $10,000, and that's because he has 60% to $15,000 of employer paid LTD coverage, long-term disability coverage, and then he only had $11,700 of individual disability. So he wanted another 35,000 and he chose a 180-day elimination period. So his premium is going to be a little lower right out of the gate because one, he's 2 years younger, and two, because his elimination period is 180 days versus 90 days. And 5-year benefit period, and it renews every 3 years, and his premium was $7,076. Okay, so we talked about group, we talked about our Lloyd's of London. Now I'm just going to touch on individual short term disability. This is a situation where I think it's become more prevalent after what happened last year with the pandemic and people realizing that they didn't have money put away for the rainy day of COVID. And so with individual short term disability, what ended up happening is some of the carriers pulled out of the market because one of the COVID claims, and then two, just the whole fact that a pandemic occurred and that could have wiped them out. So what we ended up doing is we found a long-term disability carrier that has a small benefit period of 6 months. So what we're offering is a short-term disability on a long-term disability chassis, so to speak. So what it does is it allows for us to kind of manipulate it and customize it to your client's situation. And like I said, this is good for individuals who don't have that emergency cash available or don't have short-term disability available with their employer. So with our short-term disability, because again, it's on a long-term disability chassis, you can get anywhere from $6,000 a month to $20,000 a month. Um, Obviously, we can go below 6,000, but anything between the smallest amount, a couple thousand, all the way up to 6,000, would be simplified underwriting. So simplified underwriting simply means that you would be having your name run through the MIB, which is the Medical Information Bureau, and that's a clearinghouse of insurance companies who are just looking to see if you've ever been declined, if you've ever committed fraud, if you have any kind of information on their database regarding insurance in the past. And then the second thing they do is they run your name through a prescription database to make sure that there isn't any prescriptions that the client is taking that might be of concern to them. When we go over $6,000 up to the 20,000 max, that's full underwriting, which is the same thing as the simplified, running your name through the MIB, running your name through the prescription database, but they're also going to be doing labs, blood and urine specimen. Okay? So the issue ages for short term disability, pretty much like long term, 18 to 61. And again, we could go down to as low as a 6 month benefit period. But if you wanted something bigger than that, we could do 24 months. So again, we can customize it. And then the lowest elimination period is 30 days. It used to be similar to the group where we could go down to 0 days or a week or 14. But again, with the COVID and all the claims that we're hitting, they just made it a mandatory 30 days. So my first case study is Gretchen. She's age 39 and she's a teacher way to go, teachers, after the year that they've had. And she works for the New York City um, Education Department, which has this rule that you have to work there 10 years. And don't get confused with this. You have to work there 10 years to get tenure. And what that means is they would they would only allow any kind of short-term disability benefits if you are injured, but if you're ill, you don't get any. So she was concerned that she's only 8 years into her 10-year tenure, and she wanted to make sure that if something happened to her, that she would have some sort of disability coverage. So because she's not only a teacher, she's also an adjunct professor at a local college, and she has a little side business doing education consulting. She's making over $100,000, over $110,000. So we were able to secure a monthly benefit of $5,300 for her with a 30-day elimination period and 6 months, because after that, her long term disability kicks in. And so the annual premium for her was $1,400. And I took this a step further so that you could see if you took the 5,300 times the 6 months, she'd be collecting $31,800 for a $1,400 a year premium. And she felt good about that. She felt like that was a good investment for her protection and for peace of mind. Now, our second case study here is, and I know the premium is going to be drastically different. Females pay more for disability insurance than males because we have a lot more plumbing, a lot more stuff that can go wrong. So, right out of the gate, there's a difference in the premium. He's also 29 years old, and even though it says he's a federal government analyst, he's not a federal government employee. So, he doesn't have the FERS and all the other benefits that a government employee gets. He's actually a 1099 contractor for the federal government. So he does not have access to any benefits. So he came to me asking, could you get me life? Could you get me short term disability? Could you get me long term disability? And we said, absolutely. So he has an income of 83,500, and based upon that, we were able to get him a monthly benefit of $3,100, and we were also able to get a 30-day elimination period. And he wanted a 6 month benefit period because that would segue perfectly into the long term disability plan that we had um, put together for him. And his annual premium was $359. So here again, if you take the 3,100 and you multiply it times 6 months, he's getting $18,000 of benefit, and he's only paying $359 for it. And he thought that was a good investment, again, to protect himself, give him peace of mind that in case something happened to him, he'd be able to pay his bills. Okay? So we've talked about group insurance, we've talked about Lloyd's of London and specialty insurance, and we talked about individual short-term disability. So now we're going to switch gears, and we're not going to talk about disability, we're going to talk about critical illness. And I am so excited to share, what critical illness can do, because I think it can fill a lot of gaps. And I'm sure most of you know someone that has been touched by an illness of cancer, heart attack, possibly stroke. It depends upon, I guess, how old we are. And I wanted to give you the backstory of how critical illness insurance came about. So back in the early 80s, Marius and Christian Bernard were brothers, and they were both cardiac surgeons. They performed the first heart transplant surgery, and they were so excited about how it went, but they noticed that the patient wasn't thriving after having heart transplant surgery, and they couldn't figure out why. Medically, physically, everything should be going great, but emotionally they weren't, because one, they hadn't been working, so they didn't have an income coming in, and then second of all, they've got all these medical bills, for something that's never been done before, a heart transplant. So the two of them kind of put their heads together and said, what can we do to fix this problem? And they came up with something called dread insurance, which later came to be critical illness, which really was critical care, and now it's called critical illness insurance. So it allowed them to provide a lump sum benefit to these individuals after they've had surgery, and they could do whatever they want with the money. They could pay their bills with it and just kind of put their minds at ease and get them back on their feet financially. And we'll get into the nitty gritty details of critical illness in just a minute. Right now, I just want to use a key to open your mind to the possible candidates for critical illness. So you kind of have to put your thinking cap on. And this slide is going to help you with that. So, who are good candidates for critical illness? Well, clients that aren't covered by disability or long-term care. And but what I mean by that is here again, maybe they've never purchased those insurance, maybe they're not insurable either by occupation or age or something like that. We don't know. But these are the ones that, let's not say no to it. I think they might be a possibility. Some people aren't crazy about long-term care, and this might give them maybe something in lieu of a full-blown long-term care plan. um, Retirees. We're going to go into this in a little later on, but the issue age is up to 70. So we could get some people who've retired, early retirees, people who are on schedule to retire, that are on or off Medicare. This would help them. Freelance author and writers are really difficult to insure unless they have a contract with disabilities. So this is a nice little niche for them. College level athletic coaches. So I had a football coach for a 4-year college come to me and want disability insurance, and I wasn't able to help him with that, but I offered critical care. So any of those types of individuals, this would be a nice alternative. Traders, construction workers, store or retail employees, dog groomers or trainers. I have a case study on a trainer, so I'll go into greater detail on that one. Long haul drivers, the ones that are driving the semis from one state to the other, offshore drill workers, entertainment industry workers. We can insure them with disability, but they do have a maximum benefit of 6,000 or 4,000, maybe 2,000, depending upon what they do in the entertainment industry. Pilots, those are like impossible to insure with disability. And then spouse of high wage earners. I do have a case study on this particular situation, and I'll go into greater detail on that. And then law enforcement. Those are always difficult to insure as well. But with critical illness, it doesn't present a problem. So, whoops, what happened? So I wanted to kind of point out some stuff here with regard to critical illness and disability insurance. So when someone goes on a disability claim, that disability benefit is replacing lost income. Well, what critical illness does, it gives them a lump sum of money because they had a diagnosis. It has nothing to do with a lost income. It has to do with being diagnosed with one of the covered conditions. In addition, it pays a set amount. That's not to say that disability doesn't either. Obviously, it pays that benefit amount. But this one, it pays a set amount to the individual or to the beneficiary in the event that the insured dies. And I'll go into that in just a minute. And then it also provides either a full benefit amount or a portion of it. So if someone has angioplasty done, they may not have had a heart attack. Maybe they're having some sort of what do you call chest pains, and they do an angioplasty, and they have $100,000 lump sum benefit that they've purchased. They may only get 25,000 or 25% of that benefit because they have not had a full blown heart attack. They've just had an angioplasty. But if something in the future happens to them, if they have a heart attack, they have stroke or cancer or any other covered things, they're going to get the remainder of that benefit. So, and that'll be illustrated in just a minute. So, some great things to keep in mind that the benefit is paid directly to the client regardless of any other health insurance coverage they have, regardless of Medicare, regardless of Medicare supplement, disability insurance, long-term care insurance. Doesn't matter. You're still going to get your lump sum benefit. It can be purchased in addition to long-term care or in lieu of it. So if someone's got some major concerns that they don't have a really beefed up long-term care plan, they can layer over it with one of these. Or if someone's not quite sure they want to pull the trigger on long-term care, they can purchase a critical illness plan. It can be used to pay whatever they want. So if someone is losing their health insurance and they've got to go on COBRA, it can help pay their COBRA premiums. It can help pay their mortgage, medical bills, groceries, utilities. They can put their kids through college. They can go on vacation. They can remodel their house. It doesn't matter. It's not dictated anywhere in the policy what they do with the money. They can do whatever they want with it. It can be used to pay for specialized care or experimental treatment, medication. I mean, what if you're treating, something like with cancer and you have to have experimental treatment, where's that money going to come from if the health insurance company doesn't want to pay it? Or medication. Or if you've got to get treatment, maybe you're in a rural area and you're not even remotely close, so your client has to travel and stay weeks or days or months at a time to get treatment. Where's that money going to come from? Critical illness can help with that as well. Now, this one I think would get your attention because all of you are financial planners and you're all concerned about the financial stability of your clients' um, funds for retirement. So this avoids them having to dip into their retirement to help pay their medical bills or any other bills for that matter. So the second one replaces lost income from a spouse that was working. So let's say you have a husband and wife who are both working, and the husband has a heart attack and the wife feels like, gee, maybe my place is with him. I might have to take some time off of work and be at the hospital and help him recover. Well, that means she's not getting paid either. It's not like she's disabled. Maybe he can collect disability from his company that he's working for, but certainly not her. This would help replace the lost income from her not working and taking time off to take care of him. And then lastly, it provides income while someone's satisfying the elimination period, maybe of a disability policy or a long-term care policy. So they don't have to worry about, hanging on for dear life. What am I going to do for the next 60 days, the next 90 days? This would help alleviate that. And again, some of the things that I just want to kind of point out to you is, wouldn't it be nice to be able to tell your client, hey, here's $50 to $100,000. Maybe this would help alleviate your stress. Okay. So the issue ages with some carriers is 18 to 70. And also, you can choose the benefit period, kind of like term insurance. So you can choose a 10, 15, 20, or 30 years or a lifetime. I will caution you with the lifetime, some of the carriers will reduce that benefit in half. So it just depends upon when the policy was issued. So if the policy was issued between the ages of 18 and 67 on your client, then the benefit gets cut in half at age 70. If the policy was issued on your client between the ages of 68 and 70, then that policy gets cut in half on the third policy anniversary. And no, there is no reduction in premium. It just gets cut in half. But most of the time, you'll see a lot of this stuff happens before they get to age 70, so they might have been able to use the benefits. And we're going to look at that in just a minute. So the benefit amounts can be anywhere from $5,000 to half a million. It's guaranteed renewable, which just means that if you continue to pay the premium, they have to keep the policy going. They do have some return of premium options, and I'll talk about those in just a minute. And you can actually purchase a rider that will cover even more conditions than the heart attack, stroke, cancer, renal failure. And here's another great thing, it can pay more than one time. So it's not a one and done. Okay, I had a heart attack, I get my 100,000, that's it. I'm never going to see anything again. Not true. We're going to illustrate that in just a minute. As long as there's 6 months between the diagnosis, you can collect a benefit more than once from critical illness. And not only can you cover your client, but you can cover your client's spouse and their children as well. So, some things to keep in mind with regard to how do we figure out the benefit amount. Well, insurance companies use this as a guide. The client can get up to 6 times their earned income, again, up to a maximum of half a million if they're eligible for it. If a spouse wants to get critical illness, they can get up to 50% of the working client's income. Okay? Working client's income. So if the working client makes $100,000, they can get 50,000 of critical illness for the wife, but no more than 250,000, regardless of what the working client's income is. Now, this to me is a win-win. Unfortunately, the client has to be dead, but the beneficiary, this is a win-win. So if the client purchases a critical illness policy and if they die before the benefit is paid of any cause, doesn't have to be something under the critical illness, heart attack, stroke, cancer, if they die of any cause, all the premiums, minus if there were any benefits paid, all the premiums get paid back to the beneficiary. Okay? Or if they did die of a heart attack, stroke, or cancer, or renal failure, all the money that hasn't been paid to them. So in my illustration of someone having angioplasty and they still have $75,000 left, that $75,000 would be paid to the beneficiary. Okay? So covered conditions, heart attack, stroke, angioplasty, your coronary bypass, otherwise known as CABG, invasive cancer, non-invasive cancer, and then kidney failure. But you can purchase a rider that will cover more conditions: major organ transplant, Alzheimer's, paralysis, coma, blindness or deafness, severe burns, a benign brain tumor, or ALS. Okay, I don't know what happened there, but we'll just skip on through it. So, something to kind of bring home the point here: 80% of critical illness claims can be broken down by, and this is not a big surprise, 65% being cancer and 15% being a heart attack. And I thought I'd throw these in because I wasn't sure if you were aware of this, but 66% of US bankruptcies are tied to medical issues. 60% of Americans don't have savings to cover a $1,000 emergency expense. The median cost of a hospitalization bill for someone having a heart attack is $53,000. That's the median. And then patients experience the most highest out of pocket costs during the first 2 to 3 months after being diagnosed with cancer. And this doesn't surprise me because I know people have been diagnosed and have died from cancer. And this is where they're going through all the different testing. They're trying to determine what the treatment plan is and then trying to get that treatment going as quickly as possible. So I wanted to share with you because in case you thought, obviously that reduction in the benefit happens at age 70. Well, a lot of times you might think, oh, that's just when we're going to need it. No. I wanted to show you that here's individuals in their 30s, in their 40s who are successful. They're in great career paths. And look at the situations they found themselves in. You have a business owner, she's 44 with bladder cancer. Now, granted, it's 20,000, but still more than what she would have had if she hadn't purchased this plan. You've got an optometrist age 45 with breast cancer. That's right at the age of, breast cancer hitting. So this was additional benefits that they got beyond their health insurance that they can use for whatever they want to help offset their bills. So here's a situation that I told you about where it can pay more than once. It's not one and done. And this is not a good situation for anybody to have, but it'll illustrate my point. So we have a client, she's age 38 and she has a heart attack. And she took out a $200,000 benefit. So guess what? She gets $200,000. But unfortunately, at age 42, she strokes out. But guess what? She gets another $200,000 benefit because there has been 6 months separating these two diagnoses. And then at age 57, she is diagnosed with kidney failure. Here again, she gets another $200,000. So I know you guys can add that all up. That's $600,000. But here's the thing: the premium she paid on her critical illness plan was for a $200,000 benefit. And here she got paid 3 times. You can get paid as many as 11 times if you pay for the rider for the paralysis and for the ALS and for the major organ transplant and all that other stuff. You can get paid as much as 11 times. So I think, you're getting a lot of bang for your buck, so to speak. Now, I don't know how many of you are familiar with, because I do a lot of the new advisor orientations, but there is a place called Advisor Tools on our website at llis.com. And I always take our new advisors there because on the Advisor Tools, on the right hand side, fourth from the bottom, is something called Mark's Insurance Calculator. And it's just a quick and dirty way to figure out how much term life insurance someone might need. And Mark has his methodology there. Well, I thought, what would be a quick and dirty way to come up with how much critical illness someone might need? And again, this is just a tool. You don't have to use it. You can tweak it. It's just a starting point for you. So what we figured out is if you have to pay for your mortgage for approximately 24 months, what's that going to look like? And then again, this is a small amount. We could obviously increase that, but $5,000 for medical expenses that may not be covered by your client's health insurance company, and then other essentials. And this one is just fill in the blank. It could be groceries, it could be utilities, it could be childcare, it could be remodeling the house to help accommodate, the situation that the client's in. So anything that you want that would be considered miscellaneous, you stick in there, and then that's where you would come up with the amount needed. Now, it doesn't have to be this calculation. You guys know your client's financial situation better than anyone. So I think this would be a place where you could obviously adjust that number. But I just wanted you to have some sort of tool in order to figure out what's the starting place for this. Now, my case studies. My first case study is Jim. He's age 45 and he's a self employed political consultant. He earns approximately $250,000. And sometimes self employed consultants can be difficult to insure for disability. So he wanted to layer over what he had by placing a critical illness policy in the amount of $100,000. Now, we also added a waiver of premium rider. And what the waiver of premium rider does is it waives the premium and any riders on the plan if a client has gone on to a disability claim. So if they started, not a claim, but if they started a disability situation within the last year, they would be eligible to have the waiver of premium kick in. Okay. And if they paid any premium while they were disabled, because they weren't aware that this waiver works this way, they would go ahead and refund those premiums as well. Okay. And his annual premium was 1848. And again, it just gave him peace of mind in case something happened to him. My second one, I alluded to earlier, my dog trainer. He came to me and he wanted disability insurance. And I said, Eric, sorry, we can't get you disability insurance for the nature of what you do, nor can dog groomers for that matter. But he's like, well, what do I do? And I said, well, there's an alternative. It's called critical illness. I sent him some literature on it. And he said, you know what? At my age and the people I know, this is what's happening to them. He said, this has got to protect me. So I said, okay, what are you comfortable with? And he said, $200,000. So I said, okay, let me run a quote for 200,000. And here again, we included that waiver of premium rider because again, in case he's not able to work and he's been deemed disabled, he can still make sure that the premium is being paid on this disability policy. And his annual premium is 3,485. So his is a little bit more expensive because obviously um, my previous client Jim was 45, Eric is 53, and Jim took out a $100,000 benefit, and Eric took out a $200,000 benefit. Now my next case is, and again I think I alluded to this one too, the stay-at-home parent. So this was a client who came to me and we did some life insurance, we did some disability insurance for him, and he said my biggest concern is my wife. She takes care of the house, she takes care of the kids, and I have a very important job and there's no way that if something happened to her that I could take the time off and take care of the kids, take care of the house indefinitely. He said, "So what do you do in that situation?" Well, at the time when this was taken out, we didn't have any alternatives for stay-at-home spouses with regard to a disability plan. They do have one now. I'm just going to throw it out there. Thrivent Financial does offer one, and Illinois Mutual has one. I cannot provide you the Thrivent Mutual, but I can help you with the Illinois Mutual coverage for a spouse if you're interested in it. But at the time, he wanted to go with critical illness because that was the alternative that I gave him. And he said, okay, run me some quotes. He decided on a $200,000 plan for his wife, Annie. And again, we included that waiver of premium. So, in case something happens to her where she becomes disabled, that premium will continue to be paid. And her premium, 1257. that was a drop in the bucket for her husband with regard to the peace of mind that he got knowing that if something happened to Annie, he would have $200,000 to hire someone to tutor his kids, a housekeeper, a nanny, whatever he needed so that he could make sure that his wife was getting good medical care, but that he could still continue to work until hopefully she recovered. Um, and again, there's it's hard to put a dollar value on that. So that's my last case study. Um, I want to give a free plug to myself. So in August, we're going to be doing a seminar, or excuse me, a webinar called Recognizing Insurance Writers in Life and DI, and I'll be doing that with my boss, Mark Maurer. But next month, you'll want to tune in and listen to Jerry talk about your ultimate guide to annuities. So I'd like to open it up to questions if anybody has them at this time. Um, and you can look to see that we proudly sponsor NAPFA, XY Planning Network, Garrett, NAPA Genesis, and ACP. Claudia, do we have any questions?
Yes, I have them in the chat box. So if you go back to your control panel
Okay,
under chat,
chat.
and then I have them listed there.
Okay, so I just expand the chat box then?
Yep.
All right.
And then just read the question out loud.
Okay. So the first one is, what's the minimum number of enrollees for Group LTD and Group STD? 2 lives. I made a big deal about the fact that it used to be 3, but now it's 2, so that it opens up the possibilities for a lot more opportunities to get coverage. Okay, I was under the impression that the lowest percentage of LTD offered is 60% of salary, but it looks like 40% is possible. Great. Is that the only is that only for group LTD or individual as well? Um, so with group individual, or excuse me, with group disability, yes, we can do that. With long-term disability individual, um, we can do whatever dollar amount you want. We don't have to be dictated by a certain percentage. So we could go as small as that, but usually the maximum amount of long-term disability on an individual is anywhere between 60 to 70%, and that's from all sources. So it isn't just what we can offer. If they already have individual and they have some group, we have to factor those in as well. Are those prices for the entire company or per participant covered? That is for the entire company, the annual premium for the entire company based upon whatever slide you were looking at. If it was for 5 employees or 4 employees, that's for all those employees. Okay. Next question. What does the benefit period with Lloyd's policies represent? The number of years it pays out or the number of years it remains in force if not renewed after 3 years? So the benefit period is how many years it pays out. So if the client has a 5-year benefit period and they're continuously disabled for 5 years, they would continually get that monthly benefit amount. The 3 years represents that if they have the policy in effect now, today, and then next year it's renewed, and then the year after that it's renewed. On the third anniversary, they would have to come to me and say, "Hey, look, I'm still working. I still want the insurance. I might even want more. I want to do this again." Then we fill out a new application, we get new financials, and they might need to be medically examined again. So we just kind of have to start the process again. Okay? On James short-term disability benefit, it should say benefit is 3,100 times 6, not 5,300 times 6. My bad. I cut and pasted from the one above it with Gretchen. Sorry. Okay. Critical illness policy seems like they could avoid paying out based upon technicalities of what medical conditions are actually covered. How broadly are the illnesses defined, and do you have experience with how smoothly they pay out? I don't. I've only been doing critical illness probably for like the last 5 years. And so, knock on wood, we haven't had to pay out. But with regard to the technicalities, I think it's based upon a diagnosis. So, just like anything else with group insurance, you have to see a doctor. Your doctor has to deem you disabled. It's the same thing here. They would have to see a doctor, and the doctor would have to obviously dictate what the diagnosis was. Is critical illness insurance available to early retirees? Yes. So it's available to 18 to 70 is the age group. Regardless, like I said, if they're on Medicare, if they're on Medicare supplement, if they have long-term care, there is no restriction there. There is some health underwriting, obviously. So if someone has had a heart attack, or if you've had someone under the age of like 45, excuse me, if you have a client who has a first degree relative that had a heart attack or cancer or a stroke um, between the ages of 18 and 45, they may be declined. But beyond that, we might be able to get them coverage. So it just depends upon, one of the things they're concerned about, like with breast cancer. If you have a sister who's been diagnosed with breast cancer, they'd be concerned about that. Um, is medical underwriting required for critical ill coverage? Absolutely. If denied for long term disability, for example, is critical illness a possible backup option? So it depends upon what they were denied for with long term disability. Some people are declined not just for medical, but maybe the occupation, maybe their duties, maybe they're financially just not in a good place in order to qualify for long term disability. So the medical with disability, they're concerned about 3,000 things that could probably put you on a disability claim. Whereas critical illness, they're kind of focusing in on those specific ones. Now, if you're going to go broader and take on those riders for the Alzheimer's or maybe, ALS, obviously they're going to want to look in your family history to see if that's a concern. And if you have, again, a first degree relative that between the ages of 18 and 45 that were diagnosed with that, that may be a situation where we wouldn't be able to get you coverage. What's the underwriting like for critical illness insurance for someone with pre-existing conditions? Again, like we do everything else, we pre-screen. So I have access to underwriters. I can send it up the flagpole anonymously and just get some feedback as to how that would be looked upon by the underwriters before we actually would start the application process. Do premium costs increase annually with critical illness policies? Um, that is a possibility. I've been doing this um, from the 5 years or so that I've been doing this. I've not seen an increase. That rider that would lock that in is called non-cancelable. So similar to long-term care, there is something that doesn't. There is no rider like the non-can that would lock it in. It is guaranteed renewable, which just means as long as you continue to pay your premiums, they have to continue to offer the coverage to you. But no, there is no non-can critical illness as of yet. If you have a client who's had a chronic illness in the past, what are the chances they would be able to obtain disability and life insurance? They weren't able to work for a couple of years because of this. Here again, it's hard without knowing. Chronic illnesses are difficult to insure for disability because obviously they could go out on claim for that, or that illness might trigger something else, which we would call like a comorbidity. So if someone's got high blood pressure and then they're also diabetic, either one of those could be a claim. You put them both together, it could be the perfect storm where one triggers the other. So there again, we would probably have to get the details of what the chronic illness is, run it up the flagpole to some underwriters, get some feedback, and see, if that's an insurable risk or not. Life insurance, if it's a chronic illness that the underwriters feel like it would cause that client to predecease, then that's going to be a concern. So there again, we would do that, run it up the flagpole to some life insurance underwriters and see what exactly they think about it. When you said that the average hospital cost for a heart attack is 52,000, did you mean for someone without health insurance, or is this over and above the out-of-pocket max of their health insurance plan? I don't know that one. I'd have to go back. That was a statistic that I got. I'll have to go back to the source. But I'm thinking that's their out of pocket cost. Because obviously, someone who has a heart attack and they have surgery or a procedure done, that's in the two, three, $400,000 range. So my gut feeling is that's their out of pocket cost that they would have to pay to the hospital, maybe the surgeons, anesthesiologists, people like that. How long were the benefit periods for the critical illness case studies you presented? Those were all lifetime. Otherwise, I would have indicated that it had a 10-year, 15, 20-year benefit period. So those were all long-term lifetime. Um, and you can cancel a long-term care policy at any time. You can cancel an individual short-term policy at any time. You could cancel the Lloyd's of London, and we could get you a refund on that. And the group insurance, normally we just have to cancel that. Um, it's guaranteed. Most of the carriers that we work with guarantee the vision, or not the vision and the dental, because that's a 1 year rate guarantee. But the life, the long term, and the short term disability usually has a 2 year rate guarantee. So if they didn't want it, we would probably have to cancel that, at the beginning of the month or something like that. Because you have to give the employees a chance to obviously know that they're not going to have life insurance anymore. They're not going to have any disability insurance anymore. So that's it. Thank you so much for tuning in, and we'll talk to you in a couple months.